Mixed markets Tuesday afternoon as investors plow into cyclicals. Let's get a read into the market action from Jeff Tomasulo of Vespula Capital. Welcome back and good afternoon, Jeff.
How you doing, Fred?
Doing fine, thanks. Now, financial shares among the biggest drivers north today. Goldman Sachs up nearly 2% right now. On news, it'll offer robo-advisory services to everyday investors. So I took a look at their rivals, TD Ameritrade. The TD Holdings is up sharply, so is Charles Schwab. So what are we reading into Goldman's, the probability of its success as it goes into Main Street?
Well, I think we got to look at what's really driving the financial stocks today. I think it's more interest rates than, Goldman announcing that they're going to give it to Main Street. But listen, this is a great thing because one of the things that I love about this is the fact that they're not doing individual stocks, right? It's actually creating portfolios and giving access to Main Street to get, to be able to invest in some of these themes and some of the portfolios that Goldman can create, which is unique on many levels because of the type of research and the type of knowledge that Goldman has. Goldman has started to slowly do this. We saw that with the deal that it made with Apple when they were back in the credit card that Apple, came out with. So we're starting to see Goldman branch away from, the larger, more, sophisticated investor, the rich clients, as you would say, and going into Main Street. And it's just, to them, it's a moneymaker. But the true moneymaker for these banks, and if you look across the board right now, when you look at J.P. Morgan, you look at Bank of America, you look at Goldman Sachs, they're up tremendous. They're up over 1%, 2% today, and that is because we see the 10-year starting to 10-year yield starting to increase.
That 10-year yield I was looking at, it was nearing 1.3%. So what does it talk about the prospects for the equity markets? Is it going to chase the bears away and up and up for financials now?
Well, this has been my biggest, thing. Once I start to wrap my brain around all the stimulus that we've had since the pandemic and prior to that, right? Anytime we've ever seen, the Federal Reserve Bank of the United States stop pumping money into the system, and as interest rates started to rise, we've seen a sell-off in the market, and we're seeing a little bit of that today as interest rates start to rise. The question is, where is that number, right? You just said we're at 1.3 on the 10-year. Do we get 1.5? Do we get to 1.75? We haven't seen those numbers in a long time. Think about this. We were at spot 50 in the middle of the summer, right? So, interest rates have come up tremendously off the bottom. But here's the thing. To me, if it happens over a slow period of time, the market, I think, can digest it. It's the velocity of the move. How quick can it get? If we start to see interest rates get to, $1.50, or 1.75, and we do it in a week, in 2 weeks, that's going to spook the market. And I think you would see that's where people would start to take money off the table out of equities and into, more safer stuff. And this is one of the driving forces of the market over the last 10 years, lower interest rates. So it's something that we obviously need to keep our eyes on over the next few months. And trust me, the Fed does not want this to get away from them because this could cause, obviously, major damage considering how much debt we have on the books.
Jeff, Bitcoin hit the $50,000 mark for the first time today. It's basically doubled over the last 2 months. Are we seeing a speculative bubble, or is this justified given that more institutions are getting into Bitcoin? And what does this say about equity markets, for example, the spillover?
Well, I think, listen, there's two things I always say to people when, we got this about cannabis stocks and we're getting it about Bitcoin. When you see institutions start to put their money somewhere, you have some substance to it. But that doesn't mean it can't be a speculative bubble, right? We've gotten a lot of people, and Bitcoin has gotten so far ahead of himself. But how do I know if it's ahead of itself, right? We have no idea. And the thing I always say to people, you got to be very careful because, obviously we've seen Bitcoin go from 20,000 down to 3,000 and then back up. It's the fear, the FOMO, right? The fear of missing out with Bitcoin. There's going to be opportunities to get involved. I'm not sure if Bitcoin's the opportunity here. I always tell investors, you want to put yourself in a position of strength, not a position of weakness. Buy it up here after such a huge move. You said it has doubled, right? It's made a tremendous move. I feel like you're putting yourself in a position of weakness by buying it at the areas here, even as institutions get involved. I think if you give it some time, there's going to be a correction in this. It just happens. That's what happens in markets. You're going to get a good opportunity to buy Bitcoin, probably at better prices. But even if you have to pay higher, it's better to do that after a little consolidation.
All right. Thanks a lot, Jeff.
Thank you, Fred.
Our thanks to Jeff Tomasulo of Vespula Capital. I'm Fred Katayama in New York. This is Reuters.